Hey there, Brad Casser from GreatOptionTradingStrategies.com. I got something super fun for you today. A trade we closed out this week, November 12th, 2025, that perfectly illustrates how to know when to exit a winning put selling trade early. At least this is how we do it inside the Leverage Investing Club, and it's worked out very well for us over the years. This is also our 36th winning booked trade of 2025 versus 0 booked losses year to date. But real quick, before I show you the 2 specific reasons we knew it was time to lock in our gains, and I do encourage you to adopt these principles yourself. If you trade or sell options for income, I've got quite a few free quality option trading resources that you may find valuable. That includes a link in the channel profile to the Great Option Trading Strategies website, which I launched way back in 2008. Where over the last 17 years, I put together a ton of resources, free downloadable guides, ebooks, special reports, case studies, etc., and nearly 300 articles on all aspects of selling options for income, as well as incorporating options into value investing and/or dividend growth portfolios to further stack the deck in your favor. I've also included a direct link in the description section to that Great Option Trading Strategies downloadable library, which includes the ever-popular 10 Commandments of Selling Options for Safe High-Yield Income, and for those in or nearing retirement, Trading for a Living, My 4 Rules. Additionally, I pinned a link in the comments section to the sign-up page for my spam-free daily option tips and insights newsletter. Technically, it's not a daily newsletter, more of an every other day kind of thing, which admittedly doesn't quite have the same ring to it. But again, if you're an option seller and anything we cover today resonates with you, you'll likely enjoy the newsletter as I'm able to cover quite a lot of relevant topics, insights, principles, real-world examples, and other resources related to option trading for income. And finally, there's the YouTube channel itself. I've actively been posting new videos over the last few months and have a rather daunting backlog of video ideas. Everything is now being organized by playlist, so be sure to check out the categories that are most relevant to you. Okay, I won't hold you in suspense. There are 2 factors that we use to know when to exit a winning put selling trade early. And this also applies to comparable covered calls for income trades, i.e. setting up an out-of-the-money cash secured put as an in-the-money covered call at the same strike price. And those 2 factors are remaining time value and/or basic technical analysis. I actually covered this a little more in depth via a recent YouTube video, When to Exit a Winning Put Selling Trade. And I've included a link in the description. But what does that actually mean? Remaining time value and/or basic technical analysis. Well, we don't follow any of the delta dogma that's in vogue these days. For example, mechanically exiting or rolling a position whenever half the duration has lapsed or when you can lock in half your max potential gains. But we do monitor remaining time value very closely. And when it's sufficiently low in terms of annualizing what's left on the table, we'll likely exit the winning position simply because the risk-reward profile at that point isn't attractive at all. Or we'll also consider exiting a trade early if we get some kind of technical warning sign. This usually takes the form of the stock trading higher into or near an identifiable resistance level. Now, we don't try to guess whether that resistance will hold or if the stock will break out above it, but we do note that we may now be looking at a limited upside situation in the stock, not a limited downside situation. Our primary sleep at night high yield option income strategy involves selling puts on stocks we don't believe will trade lower or lower by much in the near term, which we call limited downside situations. Now, the technical warning signs we might see is not always about resistance. Sometimes a certain potentially bearish candlestick pattern can spook us as well. While it only takes one factor to persuade us to exit a winning trade ahead of schedule, as you might suppose, both factors are often triggered around the same time. For example, if a stock we sell puts on is now trading at or near resistance, it's a pretty safe bet that the rising share price has also taken a lot of time value out of our short puts. So let me show you exactly what I'm talking about with this trade we exited this week on 3M. And here's a close-up of the 3M chart. When you look at the chart and the details of the trade, this approach to managing winning trades totally makes sense. We entered our trade selling 3M November 21st, 2025, 157.50 puts, exactly 1 week earlier when the stock was trading at $163.10 a share. And as you can see, the stock climbed higher over the following week and traded right up to that earlier resistance level around 172. There was also still another week and a half to go before expiration, the following Friday. But locking in our gains to that point was a super obvious move for us as both our exit triggers were hit. 3M was now nosing right up to resistance, as you can see. The bulk of the remaining time value on those 157.50 short puts had also gone away following the stock's $7 share price march higher. So we originally sold the 157.50 put for $1.50 a contract and then bought to close the position exactly 1 week later for just 25 cents a contract. That means we were able to lock in about 80 to 85% of our max gains in only 40 to 45% of the original duration. Final book gains worked out to be 40.97% annualized over 7 days on a real cash secured capital of $15,750, or 100 shares times the 157.50 strike price. Now get this, the original projected returns had been 21.56% annualized over 16 days if held until expiration. And most telling, what we left on the table here would only be accruing at a 6.47% annualized rate over the remaining 9 days. Conversation for another day, but managing trades based on principles and making informed choices is so much more lucrative and personally rewarding from a skill level perspective than blindly following someone else's mechanical rules to settle for inefficient and partial gains. But of course, I'm biased. Okay, a little bonus time here, because the setup and entry was badass too. While the main purpose of today's video is just to illustrate really quickly trade exit timing, I also wanted to share a key lesson about trade entry. And that key lesson is to be patient and wait for a high quality setup versus forcing a trade before it's ready. We actually had been targeting the 160 strike, but held off when the stock started trading a bit weakly. Yes, technicals helped us time both the entry and the exit on this trade. So it originally looked like the 165 support level would hold, and we were planning on a more conservative entry by selling puts at the 160 strike. But then the stock broke down a bit, and we waited for a new confirmation that the secondary support level at 160 would hold. We eventually got that, and at that point, we entered the modified trade and ended up getting better terms at a lower strike and with zero drama. If you enjoyed this and want more, be sure to check out the channel's other videos. I'm actively adding new content again and have a backlog of video ideas I want to share with you. I'm also organizing these videos in various playlist categories, so that should make it easier for you to find the resources that are the most valuable to you. Also, sign up for the Daily Tips newsletter via the pinned comment below. Options are the ultimate high-yield income vehicle and wealth building vehicle, and they can be structured in so many different ways to generate sustainable and safe high-yield income. The Daily Tips newsletter is a perfect complement to this channel because I can cover more topics and sometimes deeper in written form versus video form. Again, you can sign up directly, or there's also a link in the description section below to the Great Option Trading Strategies downloadable library page. Download anything from there, and you'll also begin receiving the Daily Tips newsletter automatically. Heads we win, tails Mr. Market loses. That means you should be coming out ahead on virtually all of your trades. Okay, until next time.